So bulls were able to start a sharp rebound end of last week. As you can see here, we did have the bears start the week strong on Monday throughout Wednesday. However, we had a large bounce off of this blue trend line right here, which if you go back on the hourly chart, you can see it starts from this August 16th high, this pivot specifically over here, and you can drag it along to this February 2nd high pivot. And you can see this is exactly where we bounced off of this retest, and bulls were able to reclaim just about this 420 level that we were at previously the week prior. So far, bulls have been able to defend any downward move that we've seen after an attempt here to break out of the previous consolidation we had been within for the past month. So we still have yet to break above this ascending pattern. You can see the two blue lines here, the top one being the resistance and then the bottom being the support. So this, if you are a bull, you'd like to see us break above this level for confirmation of further upside. Otherwise, we're still range bound within this ascending pattern before it decides on what direction it would like to go. We did actually see quite a bit of put flow hit the tape on Friday, a lot more than normal. Yes, the tape has been way more put heavy than call heavy, especially throughout this year and 2022, but we haven't seen an aggressive amount of sweep orders, at least in this case, out the money sweep orders within a 1 month time period. As you can see here in the expiration, we haven't really seen this aggressive amount of them hit the tape like we saw on Friday. So 84% puts to this 16% calls. You can see throughout the entire day leading into the bell, we had a lot of puts. And if you scroll down all the way since the morning, this is a lot of premium hitting the tape. And also it's very consistent throughout the day, which is also rare because we've seen some large put orders here and there, kind of sporadic, especially within the last month. But this is very consistent throughout the whole day. We actually saw some decent call flow as well, like this 416 order over here. We actually saw a lot of the 416 and 418s right around where we bottomed over here, as you can see, right around this 410-ish time period. So those ended up being very profitable for the whales that did load. However, as you can see here, now it's becoming very much put heavy with very short-term expiration as well as that out the money strike. So it's rare to have this sheer amount of put flow, especially within 1 day. Again, out the money within a short amount of time. And if you look over here at order details, you can see a lot of these are at the ask as well as above the ask for the ones that are highlighted in gold down here. So a lot of them came in last week. Also, we had a 741 million dark pool print here. This is a singular dark pool print, much different than a signature dark pool print. I remember singular hit the tape within 20 seconds of the order being executed versus signature being within 24 hours of the actual order being executed. So big difference there. This is quite the size for a singular print. And this one hit right before the cutoff time of 5 p.m. Eastern. But as you can see here, we did have 35 different signature dark pool prints as of Friday. And if you go over here to the dark pool levels feature, you can also see we had 3.3 billion in total premium at the 414.65 level, and this was consistent throughout the entire week. Again, that 414 to 419-ish range has a ton of premium. We saw the last 2 weeks some 4 billion to even 5 billion plus prints, just like we saw here last Friday. It was a 5.3 billion print at the 419.21 level. We did end up closing the week above that level. However, still it seems very unlikely to me, at least just based on experience with dark pools, that we had a lot of buying up here after being so extended to the upside, not necessarily in terms of an overbought extension, but still the fact that we've been going up all the way since this March time period. Yes, we had a lot of consolidation throughout this range, but still, nevertheless, you have to remember this is smart money that has access to dark pool exchanges. So it's only institutions. This is not retail that has access to a dark pool exchange. So it's exceptionally unlikely that they are loading more shares up here around this 419 range, especially 5.3 billion worth. We saw them load all the way back here around this bottom. It was also the retest of the downward trend line in SPY. We've seen quite the rally so far since that bottom here around the middle of March. But again, just super unlikely they are buying at least that large of quantity of shares all the way up here around this 419 and even 415 just seems excessive at the moment to see them buying that large amount of shares. So again, just something to be aware of. And of course, we have been going up as of lately. We saw that up move as of 2 weeks ago, followed by that initial downside we had last week, but then also that was able to bounce and reclaim all around this level. So I'm just sharing the data that I have with you. In my experience, it seems like there is a lot of selling. But of course, I have been saying that now for the last 3 to 4 weeks in terms of my expectation that we've been looking at a lot of dark pool distribution. We haven't gone that insane to the upside for it to be completely obvious that I'd be wrong. In this case, since we haven't had an extreme breakout of, first of all, this ascending pattern, but also a clear rally out of this range that we were in previously. The top of this range would be around this 417. So yeah, we have closed above it now for 2 weeks, but now you'd like to see continuation. And at that point, then that would make my thesis about dark pool distribution completely wrong. We will see if that happens. My bias is that it won't, but still just providing a alternate scenario for you guys there. But still, in comparison to tech, the rest of the market really hasn't had that pronounced of a move. Yes, the S&P 500 had quite a rally, especially on Friday, and it's been able to maintain this upward momentum so far. But still, compared to tech and stuff like Apple and other big tech tickers, the rest of the market has been lagging. As you can see here, we did have Apple break out a little bit ago of its macro channel that it's been trading within for a very long time. So it did break out of this. Technically speaking, if it were to reclaim above this roughly 176 to 177 range, that would warrant a move all the way up to close to the all-time high level. Again, it's not my expectation here, but still pretty insane how far it has gone. It's gone way past my expectation. So up to you to decide if it does actually have enough strength to go up to this all-time high level. So Apple and Microsoft are the tickers to be watching right now, especially because of how much they're weighted in not only the S&P 500, but also the NASDAQ. As long as these tickers remain strong as they are right now, then it's going to be very difficult for the overall market to have weakness, but still the opposite remains true. If they do exhibit a lot of weakness, for example, Apple here, if it breaks this 171 roughly level, where we've seen a double bottom so far, if it can break below that, especially with Microsoft showing some form of weakness, then we will enter some form of a correction off of it. So Apple and Microsoft are two main tickers to be watching, and they will provide a lot of confirmation for a general consensus of what can happen to the rest of the market. Additionally, SPX, as you can see over here, did just about break out of this supply zone. I would like to give it one more week to show confirmation that it's able to stay above. If that were to be the case, then that would have more of a bullish emphasis to the upside. That's, of course, just technically speaking. Obviously, just looking at fundamentals and other things, as I've been talking about in previous videos, it doesn't support that much of an upside thesis. But nevertheless, this supply zone is very crucial going forward, as well as this gray trend line. This is from the 2018 high pivot. I've shared this in previous videos. But now, 2 back-to-back weeks, we've been able to close just about at the top of this supply zone. So very crucial here, especially heading into a 4-day week, that bears are able to reject around this range and have price close at least the weekly below this supply zone. That would show confirmation of further downside, because as of now, bulls have remained strong. They've been able to bounce it, especially off this range right here. Not only is this the retest of the trend that I showed you guys earlier in the video, but also this is around this 4,100 demand level that I also have on this chart. They've been able to find a support every time off this level, as you can see over here, which allowed them to bring price all the way up back to the top of the supply zone. So again, very crucial week coming up here. Watch this major supply zone here between roughly 4,170 and 4,195, especially on the weekly close, depending on where the weekly closes. That will give bias into the rest of June, at least up until OPEX for June, so the next about 3 weeks. So you're going to want to see a close at least within the supply zone here by the end of the week. Better off is a close below the supply zone by the end of the week if you are a bear. And then if you want to have more continuation to the upside into OPEX for June, you're going to want to see a close above the supply zone again end of this week, which we have seen so far the last 2 weeks, just about at the top of the supply zone. So despite this week only being a 4-day week, very crucial for the structure heading into OPEX, depending on how we close. So do watch for that on Friday. And other than that, continue to watch this as well, this ascending pattern on the S&P 500. It is likely going to retest this top resistance as of tomorrow for Tuesday, just based on the future session we saw throughout today. So very crucial if bears want to have a chance here heading into the end of the week and we get that close below the supply zone for that confirmation of further downside, you're going to want to see rejection off of the top of this ascending pattern. So this 423-ish level is very crucial to start off the week. And other than that, though, appreciate you guys watching this video, and I'll see you guys next time on Wednesday.